Welcome to the Africa Development Hub. Here we explore the future of Africa, its rapid growth, history, and legacies. If you want to see more content about Africa's future and its development, be sure to like, comment, and subscribe. A strong financial system is the backbone of any thriving economy. Across Africa, banking institutions, digital payment platforms, and stock markets are evolving rapidly, creating new opportunities for businesses and individuals alike. But despite these advancements, access to finance remains one of the biggest barriers to economic growth on the continent. Can Africa's financial sector overcome its challenges and pave the way for widespread prosperity? Historically, Africa's financial sector has been shaped by colonial banking systems that catered to foreign businesses rather than local populations. After independence, many African nations established their own central banks and financial institutions, but access to banking remained limited to the wealthy and urban populations. Today, Africa's financial landscape is transforming at an unprecedented rate, driven by technological innovation and new economic policies. Countries like South Africa, Nigeria, and Kenya have developed strong financial hubs, with stock exchanges and banking institutions facilitating billions in transactions annually. However, in many parts of the continent, large portions of the population remain unbanked, relying instead on informal financial networks. Fintech and mobile banking solutions are now stepping in to bridge this gap. Africa is leading the world in mobile banking innovation, with over 60% of the adult population unbanked. Mobile money platforms like M-Pesa, Flutterwave, and Paystack have revolutionized financial access, allowing people to send and receive money without a traditional bank account. Kenya's M-Pesa alone processes transactions equivalent to over 50% of the country's GDP. Fintech startups are rapidly expanding, offering microloans, investment platforms, and digital wallets that empower entrepreneurs and small businesses. The impact is profound, enabling millions to access capital, pay for services, and engage in commerce without physical cash. However, challenges remain, including regulatory concerns, cybersecurity threats, and the need for greater financial literacy. Africa's stock markets are growing rapidly, offering new investment opportunities for businesses and individuals. The Johannesburg Stock Exchange, JSE, remains the largest and most established in Africa, while markets in Nigeria, Egypt, Kenya, and Ghana are expanding. These markets allow companies to raise capital, attract foreign investment, and drive economic growth. Despite this progress, Africa's capital markets remain underdeveloped compared to global standards. Limited liquidity, regulatory hurdles, and investor skepticism have slowed growth. However, as financial institutions strengthen governance and transparency, Africa's stock markets could become a key driver of continental prosperity. Central banks play a crucial role in stabilizing African economies, controlling inflation, and managing currency policies. Countries with strong monetary institutions, like South Africa and Botswana, have successfully maintained economic stability, while others have faced challenges with currency devaluation and inflation. One of the most debated issues in African finance is the reliance on foreign currencies for trade. The CFA franc, used by 14 West and Central African nations, remains pegged to the euro, sparking debates about economic sovereignty. Meanwhile, efforts to create a single African currency continue under the African Union's long-term economic plans. Whether Africa can achieve true monetary independence remains an open question. Foreign direct investment, FDI, is a double-edged sword for Africa. On one hand, it fuels infrastructure development, technology transfer, and job creation. On the other, it often comes with heavy debt burdens and foreign control over key industries. China has become Africa's largest lender, financing major projects from railways to energy plants. But concerns over debt sustainability continue to grow. Countries like Ethiopia and Kenya have benefited from foreign investment, yet rising debt levels threaten long-term economic stability. The challenge for Africa is to strike a balance, attracting investment while ensuring fair terms that do not compromise future generations. Strengthening local industries and increasing tax revenues will be key in reducing over-reliance on external financing. The future of African finance lies in innovation, regulation, and self-sufficiency. The rise of blockchain technology and cryptocurrency has opened new possibilities for cross-border transactions, reducing reliance on traditional banking systems. Countries like Nigeria and South Africa are exploring central bank digital currencies, CBDCs, to modernize payments and enhance financial inclusion. Financial inclusion efforts must continue expanding, ensuring that women, rural communities, and small businesses have access to credit and investment. If Africa can build a strong, independent financial system that serves its people rather than foreign interests, it can unlock unprecedented economic growth. Africa's financial transformation is underway. With mobile banking, stock market expansion, stronger monetary policies, and investment in homegrown industries, the continent has the potential to build a self-reliant economic powerhouse. But will Africa seize the opportunity, or will financial dependence continue to hold it back? The choices made today will shape Africa's financial future for generations to come. Thanks for watching the Africa Development Hub. If you want to see more content about Africa's future and its development, be sure to like, comment, and subscribe. See you in the next episode.